Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfield, and here are precisely three important things to pay attention to for the upcoming trading week. Now, last week we talked about big, heavy macro pieces, which could create some great opportunities for the months and maybe even the years going forward. But this week we wanted to focus on precisely things that will happen, and I guarantee that they're going to happen this week. I'll start things off with the guaranteed earnings calendar. Now, it's a very quiet week. There's only 178 companies reporting this week, and a lot of them are names you're going to go, who? I can't even pronounce that because it's so many international firms. That said, there's just a smattering of major names. Let's start things off on Tuesday. That's right, not Monday, but Tuesday with Micron Technologies, Lulu Lemon, and McCormick. On Wednesday, you've got Five Below and Dave & Buster's. And on Thursday, Walgreens Boots Alliance. And that's it. Believe it or not, that's pretty much it. Now, there are a lot of other companies, so always check your earnings calendar so that you don't get caught off guard holding something that you probably don't want to during earnings. But that said, a quiet week. Now, one of the main things that Jerome Powell and the Fed has been talking about is inflation. Remember, 2 years ago, what inflation? A year ago, it's transient. 6 months ago, it might be a little bit higher than expected. Now we're talking, oh, this could be really high going forward, especially with all that's going on with Russia and natural resources coming from Russia. Prices are surging. So the Fed has said very clearly, specifically, that they'll focus on the PCE Core Price Index. So we should probably look at that too. Coming out this week, you can see the chart of the Core PCE Price Index here. That's going to be Thursday at 8:30 a.m. Eastern Standard Time. Now, this goes all the way back into 2005. You can see really for the better part of 12, 13 years, it was pretty flat. But of course, COVID hit. The government pumped in trillions of dollars into the market, and you can see we're starting to see inflation rise. Now, on the hard right edge here, you can see it's certainly been sloping up, but we've been stuck at 0.5. And the expectations are that we're going to start to see this inflation slow down. And in my mind, I'm thinking, hold on a second. We haven't even factored in the rising price of oil because of what's going on over in Russia, or the rising price of wheat, or the rising price of corn, or the rising price of soybeans, or the rising price of silver and gold and food. I mean, all of these things are rising, so I'm actually thinking this number could be higher than 0.5, which would further put pressure on the Fed to raise rates even more aggressively going forward. So this is a very important announcement to watch out for on Thursday because the traders will be watching this as a guide for what the Fed is going to do going forward and how aggressive they're going to be. Now we move on to our final piece for the week, which is unemployment rate. Now the Fed also mentioned, actually Jerome Powell mentioned in his press conference last Wednesday, was that we have full employment. The employment market is robust, and right now we're at 3.8% unemployment. Now, looking at this chart, you can see it's been on a pretty nice slide, drifting down, lower unemployment. That's what we want, and it's pretty much back to the levels we saw back in 2019 and early 2020 before the pandemic hit. That is the floor. So it has a lot of people thinking, how much lower can the unemployment rate go? Well, granted, things do seem like they're firing on all cylinders. However, when you get so low on something, how much more low can it get, right? It's going to hit that floor at some point. It's probably not going to go to zero unemployment. That's just an impossibility with a global economy. Now, what does it mean for you and I as traders? Well, what it means is on Friday, you could get some nice spikes up or down in the market based off what that unemployment rate is. Because remember, there's a word out there that the industry is fearful of right now. It's probably the most scary word in the Fed's repertoire, and that is stagflation. It's not inflation, it's not deflation. Stagflation is probably the thing they fear the most. Because if you have inflation, well, you simply raise rates or you remove money supply and you fix that problem. If you have stagflation, now you have slowing growth, high unemployment, and high inflation. So how do you fix that? So everyone's keeping their eye on the unemployment rate because right now we don't have any issue with unemployment. It seems very good. We're very low levels. But if that does start to spike and start to rise, then the stagflation discussion starts to enter the marketplace, and that could create a little bit of fear and jitters for our financial markets. That, my friend, is your Monday Morning Must-Knows. We'll see you next week.